Chinese stocks have been rocked recently due to COVID shutdowns in the region. However, we know it won't last forever. Some investors see the dip as a buying opportunity. We found one ETF that's seeing an unusual spike in search activity, but we've ranked it at 4 out of 10. So while we're all for buying dips, we don't mean every dip. Trackstar, a proprietary sentiment indicator, has flagged the KraneShares CSI China Internet ETF. It's an ETF focused on Chinese internet stocks, and its search volume is outpacing individual blue chip equities. But is this just speculative trading, or is there an investment to be made? We dig in to find out. The ETF, also known by its ticker KWEB, tracks the CSI Overseas China Internet Index, consisting of Chinese internet and internet-related technology companies. It allows investors access to a diverse batch of Chinese internet companies listed in the US and Hong Kong. There's 42 stocks in the KWEB portfolio, with the top 10 holdings including the likes of Alibaba, Tencent and JD.com, and they make up more than 62% of its weighting. KWEB began trading in 2013 and since inception has delivered a cumulative return of 30.74%. However, its performance over the last 3 years has been poor. If you're an investor who wants exposure to Chinese large caps, KWEB is not your only option, and each alternative has its own unique composition. The last 5 years have been brutal for Chinese ETF investors, and KWEB has been the worst performing fund in the group. However, many financial pros have begun to show interest in Chinese names as the country's COVID and economic policies evolve. Shares of KWEB are down 16.8% year to date, which isn't awful considering how the overall market has performed in 2022. However, there's just too much uncertainty around China, from COVID restrictions to a potential trade war with the US. The fund's performance over the last 5 years has been awful, and while we believe in diversification, we're reluctant to buy KWEB. We just think there's better alternatives out there if you want exposure to Chinese stocks.